Hi, welcome to the Market Alert for Wednesday, the 1st of July 2015. Starting off in the 5-minute chart, you can see a bit of a volatile day yesterday for the Dow. No surprise really, as the Greeks actually defaulted on their obligation to pay back 1.5 billion payout during yesterday. You can see that it's all through the news. Greece defaults, Athens fails to repay IMF loans. So it's a case of seeing where we go from here. But at the moment they're technically in default, although they are still trying to thrash out some sort of a deal. Of course, this is going to affect the markets, and we've seen a bit of a switch where the first hour was great to trade. It's now just shifted to the sort of afternoon session now, and that's afternoon session New York. The morning session having some quite large range price bars, which of course is going to affect the signals. So it took until 1500, 3 o'clock before we had the first PTI, and if we just mark this one up, you can see the market trading down to the 20-point scalp, but not down to the psychological level of 17,600, which the market did do later on. But in between that, the market came back and was stopped out for a 40-point loss. That's if you held this trade, which is something that I tend to do with these, although I do modify it slightly by taking half the position at break even once the 20-point scalp, and then moving the stop down to break even on the remainder of the trade as well. But if you want to try and hold these positions, especially as there's so much negative news in the background, like I say, this one, you saw the market come back, market closing back above the 17,650 level, and then going above the stop there. If you didn't take the money off the table at the 20-point scalp, which is something that I tend not to do, because with the PTIs, that's why they're called PTI, psychological trading indicator. Is to trade towards the psychological levels. The market eventually does trade down to the 17,600, and then you see the market finding support there. You've got buying pressure coming in after the selling, and then that high volume in the bar following the buying pressure bar there as well. So you can see that the market's finding support with this sort of test type bar. The market then gives us a buy signal. You can see the buying coming in there, 3 straight bars in the late session or afternoon session in New York. We get another PTI, this time the market trading up to the psychological level of 17,700, and they're giving us the chance to recoup some of the profits. You can see 28 points on this trade, and then this is followed by a reversal through this psychological level of 17,700, and we see the market trading down to the scalp, and then we see the market closing through this as well, as the weakness returns to the market down to the next psychological level in this sort of area for about 60 plus points there, 66 points, as the market heads back down. And again, you can see that happening just after 9 o'clock there. So again, giving you the chance to recoup and also trade down to those psychological levels with the PTI. So the market's not really in a big trading range. It's just that the price bars have large ranges within that trading range. If you have a look at the daily chart, you can see yesterday was a lot narrower than Monday, but notice the volume is greater as well, which is why you're seeing the market turn around and move back towards the upside today. So whether the market knows there's a deal, or the central banks are all getting together to create some sort of a deal, I do not know. But the market at the moment showing some sort of support there as prices attempt to move back to the upside. And the first resistance in this market is going to be the high of yesterday's bar, 17,739, should the market continue to move higher there. I'll just save that. And on the news front, there's quite a bit out actually this morning. We've got Carney speaking in the UK, Eurogroup meeting as well, which no doubt that's at 11:15 will have an impact on the market. And non-farm employment change is out today, ISM manufacturing as well at 3 p.m. That's the only one that's released in the official time of the Dow trading session there. 52.8, 53.2 is the forecasted figure there. And finally, in the implied volatility, 1646 we had on Monday. Tuesday's implied volatility figure at 1547, dropping nearly 1% there as the market made its way back, as the market expected a default, and that's precisely what it got. So it's probably why it's moving back towards the upside at the moment. Right, that's it from me for today. I will see you in tomorrow's edition of the Market Alert. As ever, thanks for your support and also for watching. See you in the next one.